Good morning and a warm welcome to Community Space, the BBPA's financial program. I'm Chanelle Smith and I'm absolutely delighted to be your host this week. Before we dive into this exciting journey, allow me to share a little bit about myself. I spent years working in the financial industry and studying finance. I'm the founder and executive director of TSK Wealth Planners, a nonprofit designed to help serve underserved communities. I'm passionate about helping individuals and communities achieve financial wellness. My journey in this field has led me to this wonderful opportunity to facilitate this financial literacy program with all of you. Over the next week, we will be exploring the world of credit rebuilding, and I couldn't be more thrilled to have you all here. It's a subject that can sometimes feel complex, but together we will break it down into manageable and actionable steps. Today, we have the privilege of hearing from Tefari Bailey, who is an expert in his field and passionate about financial literacy. Tefari is a dynamic entrepreneur and a financial maven renowned for his exceptional achievements across diverse sectors. Commencing his career at TD Canada Trust, Tefari swiftly ascended from an entry-level teller to a seasoned financial and investment advisor. A trailblazing Black entrepreneur, Tefari founded and sold his first startup, Canada Homes, a Canada-wide digital marketing agency that specializes in serving real estate professionals, culminating a successful sale during their university years. Undeterred by success, they launched Hutsy Financial, a financial institution focusing on people in marginalized communities, low-income Canadians, and new immigrants to Canada, offering credit building, easy payroll access, free banking solutions, garnering triumphant appearance on CIBC Dragon's Den, where Tefari secured $500,000 in funding from West Hall. His prowess in securing investments extended beyond the den with a total of $1.5 million raised. Acknowledging his transformative contributions, Tefari received the Faculty of Social Sciences Distinguished Graduate Award from Brock University. His achievements further shone at the Canadian Startup Fest, where Tefari clinched the Audience Choice Award and the $100,000 Black Entrepreneurship Investment Prize. Currently spearheading Hutsy's exponential 35% weekly growth, Tefari continues to reshape the financial landscape, exemplifying innovation and unwavering dedication. And we are pleased to have you here with us today. Are you ready, everyone? Let's get started. Hi, Tefari.
Chanelle, thank you so much for the kind words. Really do appreciate it. And thank you all so much for taking the time out of your Saturday to join us today. Really excited to share everything with you today. As Chanelle mentioned, my name is Tefari Bailey. I'm the CEO and founder of Hutsy Financial. We're building out a financial institution for marginalized communities, low-income Canadians, and new immigrants to Canada by providing products and services around them that add value, such as the first debit card in Canadian history that builds credit with every purchase that you make, and no-fee banking solutions. But today, we are here to talk about a few things. And what I want to discuss today is why businesses need financing for growth, the type of financing, understanding credit lines, and how to secure loans. Every time I do sessions like this, I always ensure that I want to make them interactive so that you guys are generating as much value as you possibly can and you're asking questions along the way. Is everybody up for that? Okay, awesome. So the first subject matter that I wanted to discuss today is why businesses need financing for growth. Businesses, regardless of their size or industry, they find themselves at a crossroad where expansion becomes not just a goal, but it's absolutely necessary because you find yourself doing way too much and you don't have the human capital to support the demand that you have. So it's ultimately an essential for survival and success. While organic growth is ideal, the reality is that many businesses require external financial support to fuel their expansion. As Chanelle mentioned, even us, we needed more capital to fuel our growth, and that's why we were able to go on Dragon's Den and raise $500,000 from Wes Hall and his team to really grow. So the four subject matters that I have broken this down into: number one, capital intensity of growth. When it comes to expanding a business, it requires significant capital intensity, whether it's opening up new locations if you have a retail store, investing in technology if you're a startup, or increasing production capacity if you are having products and services. The financial decisions constrain internal resources, and financing provides the necessary funds coming in to undertake these ventures without compromising your daily operations. Research and development. When it comes to innovation, that's a cornerstone of sustainable growth for a lot of industries, especially my industry, since I'm in tech and finance. A lot of businesses need to invest in research and development to stay competitive. Financing solutions support these efforts, enabling companies to build new products, new services, expand into new markets, and fostering long-term virality. Market expansion, speaking on that, entering new markets, whether regional, global, if you have a salon and you want to expand into a new salon in a different city, there's so many different use cases for this, but financing provides the means to penetrate untapped markets, increasing your customer reach and diversifying revenue streams. So the question that I have for you all is, how has your business experienced the need of external financing when it comes to navigating growth challenges in any of the matters that I address, whether it's research and development, seizing opportunity, or just needing capital to hire new employees? I'd love to hear from you all and learn what you do as well.
I usually go first to give everybody a minute to dive in and get warmed up. Can you repeat your question one more time for us?
The question that I have is, name a time that you needed financing for your business, and what was it for? Was it for research and development purposes? Was it for hiring new employees? Was it for expanding your products across other geographies? I'd love to hear it.
I would say last year, my business, and guys, don't forget, type in the chat or raise your hand and I can call on you, or you can unmute your mic and interrupt us at any time. I would say last year, I needed money to hire employees. That was probably like my biggest difficulty, my biggest trial. Thankfully, we were able to get government funding for that, but it wasn't sustainable. So that's definitely something I'm interested in hearing about. And Andrew in our chat, hi Andrew, he said R&D. If you want to unmute and tell us a little bit more about that too, that would be cool. But he said research and development.
Yeah, hi, it's Andrew. It's nice to meet you and nice to see you again, Chantel.
Hi Andrew, nice to see you.
So yeah, we're in business we're a home care company, been in business for the last 10 years. The advance of technology, of course, is taking over all industries. So as a traditional home care company, we provide support to families. So we'll send a personal support worker to the home, a nurse, and provide other services for seniors. However, over time, what we're seeing is our services are getting very expensive because of just general level of inflation. So we're seeing more and more people choosing their own home caregivers. So, and this has been a trend going on for the last 6 years. So what we did was we needed to develop a piece of technology that connects the caregiver and the families directly together. I hate to use the term, but the best term to describe it is to Uberize the home care space. So we created a technology. We're building it now, so it's still in construction. So we got some funding from some of the great organizations that propped up over the last 3 years to support Black business. So we basically have used that funding to develop our platform, which is still in construction. So.
That is awesome. I really love to hear and love that for you, Andrew. So thank you so much for sharing your story in terms of what you were using those funds for on the research and development side and learning a little bit more about your business. Thank you for that. I believe there was another comment from Ms. Palmer about purchasing media equipment.
Yeah, there was. And she said purchasing media equipment. Michaela, I'm going to take my shot. I'm thinking it's Michaela. If you want to come off of mute and maybe tell us a little bit more about that, we'd love to hear. We'll give that a second.
Yeah, hi, morning. It's Michaela. So I own a content creation business, and with the emerging technologies, you are always striving to provide more high quality content. So, you sometimes part of my budget is really just making sure that I buy new cameras, new lenses, or just storage devices, because you onboard a lot of new clients. So you have gigabytes, terabytes of content, and definitely sometimes you don't want to use the cloud to store everything. So you buy actual devices. So, yep, I still I'm looking for, I'm glad I tuned in today because I'm still looking for more financing. So, yeah, I'm gonna hear what you guys have to say. Yeah.
Thank you, Michaela.
Awesome, awesome. So if there's no other comments, thank you so much for sharing that, Michaela, with us. You had mentioned that you joined this call to learn about different financing. So I'll touch on that. I'll touch on the different type of financing, because now that we understand why a business needs financing for growth, there's multiple different financing options that's available for everybody, but it's no one size that shoots all. You really need to pick the right financial instrument based off of your business's unique needs and growth trajectories. So the first kind of loan that I want to talk about is traditional loans. So these are often offered by banks. They're a well-established form of financing. They come with fixed terms, interest rates, and a regular repayment schedule. So what the banks are typically looking at is your income to debt ratio. They call this TDS, GDS ratios. They just want to ensure that you're in the financial situation to afford to repay back that loan and still have healthy margins to cover your cost of operations, cover your cost of employees, or things of that nature. And that really de-risks it for them in order to make that loan. Have any of you ever applied for a loan with a major financial institution? And if so, what was your experience?
I'll go first. Oh no, we're ready. Andrew, go ahead. Let's hear from you. I
Yeah,
see that.
I applied and my answer was no. Um, so it was back when I started, but it was more a question of they said I didn't have experience, but no, I have not used a traditional bank. So the other development agencies that we're using that are out there now, they mentioned the same issue of the debt to equity ratio. They're using the same measures as well. So.
Yeah, so to combat that, what I would suggest is always keep your costs low. Whatever you could do to minimize your costs as much as possible, and just show a path, in which I'll talk about later when it comes to creating your business plan and projections, to just really show that you're able to grow your business month over month when it comes to whether it's users, product sales, revenue, and show that you're keeping your costs low and growing towards profitability, if not already. That'll position you the best in order to get a traditional loan from a major financial institution. I used to work in the banking industry as well, so I know how that goes. I see the struggles that a lot of people that happen to look like us face when it comes to that. But yeah, if it's the TDS, GDS ratios, that's everything. Does anybody else have an experience of them applying for a traditional loan with a major financial institution?
Is a car loan or a loan you take out like a mortgage considered a traditional loan?
Yes, but those aren't for businesses. That's for a house or a car.
So what about if you're making like a business investment? What kind of loans are those?
I wouldn't suggest, me personally, I wouldn't suggest taking out a loan to invest in a business, as that's very, very risky.
Juliet, you said yes. Do you want to share something with us? Have you
Yeah,
had to take out one? Yeah, go ahead.
a blessed morning, everybody.
Right.
So I have a comment as well as an experience. So my comment was that because we were a new startup, in order for a company to acquire credit, we had to do lease to own equipment. So we built that up. It cost us a little bit more in regards to the lease lending rate, but it was worth it in the end, because after 3 years, we built up enough credit. So therefore, when the banks look at us, they see that we do have good credit with a leasing institution. And we made sure and maintained that. So with that, and we did it for computer and a corporate printer. After that, we got from Scotia. We didn't even apply, but we had gone through the lending process with CIBC, Turner, I believe it is, and they both rejected. And well, CIBC kind of and didn't. What they said was, get this property first, and then we will go back to the application. And then I had to go through about 5 different agents at CIBC through the entrepreneurial program. And because they were just leaving the bank left, right, and center. So every time we started with somebody else, it was they asked and required something different. And it just got very frustrating. And at the end of it all, with all that you did, nothing came out of it, right? So, and this is what I find with through the entrepreneurial program with Black entrepreneurs. It's not as black and or colored as they make it to be. It's very difficult. And for somebody who is a up and coming entrepreneur who doesn't know all the ropes and the loopholes and all that, it can turn them off from their goals and their dreams and their aspirations. And if there's not somebody, even with all this program that you're given, which is excellent. I keep telling you guys that. Excellent, excellent, excellent. However, at the end of the day, somebody might not be in the same position as I am, or to know certain things, to overcome that obstacle. They will get frustrated and throw in the towel, and that's an opportunity gone down the tubes, and the generational wealth just got tarnished, you know? So with saying all of that, because of the good credit we built up through the leasing company, we now, Scotia, which we never even attempted to apply to because of all the negative things that we were getting from the other major banks, they just approved, pre-approved, pre-approved line of credit for us. We never went to them, asked them for anything. We do have a Scotia account, but they just pre-approved it based on, I guess, and you know what's so funny? AI has a lot to do with that as well. So with that, we have that, but we don't touch it. We just build up, we use it sparingly, and then we put it back up, repay. So therefore that again builds up credit for us. A lot of people don't have that opportunity. So I'm just grateful to God that we got that. But just to voice that and to throw it out there to others that, you know, these are areas that you can always venture into, because it's not all the time they take your personal information. They go based on the business first. And then if the business doesn't pan out in regards to the credit numbers that they're looking for, the credit score, they will go to your personal. Now, taking the personal, that's a whole different ball game. So
Yeah.
I know I'm a little long-winded, but I just need to put that out there.
No, that's okay. Thank you so much. That was definitely really, really valuable. And from that, I certainly heard like your cry in terms of saying that there are entrepreneurs in the community that kind of want to get ahead or are looking for that funding or need that extra for help or assistance. And not everyone is maybe like us or as vocal or as able to advocate. So Tefari, did you want to speak on that?
Yeah, definitely, Julia. Thank you so much for the high-level overview there. I noticed a lot of things that I could relate to as well working in the bank. And number one is bank turnover. So people come and go within the banking system just like that, whether they're getting promotions or let's say they're working at TD, then they move on to RBC or another major financial institution. So to everybody, whenever you're dealing with somebody for a subject matter like this, you always want to ensure that they're a senior person and they've been in the branch at that role for a long time. They're not just, somebody that just recently started. They'll only be working there 8 months to get a promotion and move on. So that's for sure. And if you ever do get declined from a loan or a line of credit with a major financial institution, always ask what the reason was, because there is a reason why you were declined, whether it be your TDS, GDS ratios weren't there, whether you weren't making enough revenue, or whatever the issue may be. That way you can make the appropriate adjustment. So when you do try to get that loan again in the future, you optimize for your chance of success. When it comes to rewards as well, so you'd mentioned that you barely use your line of credit. When you do, you take money out, you put it right back in. That's awesome. I would also suggest maybe getting a corporate credit card that has rewards as well. So at least while you're doing that, you're earning some sort of rewards, whether travel points, cash back, or whatever it may be. That way you're getting an additional amount of value there also. And also the pre-approval, that's great. So if a financial institution gave you a pre-approval for that line of credit, that means something is going really good. So hats off there. And yes, I believe that the rent to own or the lease to own strategy that you were doing really helped, since you were making monthly payments. That was going on your credit report. You did have somebody that you were paying these consistent payments to. So that's always great.
Okay, awesome. I don't think we have any more comments right now, so you can continue.
Awesome. So we talked about traditional loans. There, now let's talk about lines of credits, even though we were just sort of discussing that. But for those that don't know, lines of credits offer businesses a flexible source of funds. So unlike a loan's just a lump sum of payments where, let's say you're approved for $10,000, they just disperse the $10,000 into your account and you're paying interest payments on that on a monthly basis, whether you use it or not. A line of credit, it allows you to draw funds as you need. So let's say you are approved for $10,000, but you only need $500 to make a payment. You could pull that $500 from the line of credit, and then you're only paying interest on that $500 instead of the full $10,000. So let me ask you all this. Has anybody here ever considered using a line of credit to manage your business's cash flow? In the event where you are short on cash one month, would a line of credit be of value to you, or has anybody have an experience with a line of credit that they want to share?
Good morning, everybody. Hi.
Good morning.
Hi, Chanelle.
Hi.
Yes, well, I just wanted to say I'm really happy that you guys are facilitating this. In terms of a line of credit, I myself have not pursued it at the traditional financial institutions, the banks, but all my clients have gone through it, and there's a lot of hoops to go through. In terms of the beginning, like in the beginning, a lot of these business clients will use a lot of their personal lines of credit to be able to build up their business, because you may or may not know, if you guys have tried, that the banks will always say that you have a limited commercial credit, and then that was probably going to be the reason to not want to extend a commercial line of credit. But I personally believe that a line of credit is necessary for all businesses. And if every business can get one, obtain one, they should, only because it's the same as a credit card, right? They're both revolving credit products, but the line of credit is significantly cheaper. Definitely, you may have to start off with a credit card to justify to your banking institution to extend to you a commercial line of credit. But that in itself is, it's almost counterintuitive to want to pay more just to prove that you can pay less, right? So anything that you can do, I know I always encourage my clients to put everything in their business's name, like all their bills, their cell phones, car payments if they can. And even then, if you have all these bills and expenses in your business's name, and then you go to the bank to secure a commercial line of credit, it may still get declined. But I personally believe that a commercial line of credit is the best form or best credit product for a business. But then keeping yourself under 30% utilized is extremely important too as well, because being over the 30% threshold can make it harder for you to increase that line of credit or to obtain another credit product in the name of your business. So yeah.
I completely agree with everything that you said, Grantley. I'll share a story of me when I used a line of credit as well for my corporate account. So we opened up this line of credit maybe 2 years and we haven't touched it. And then it came time to us looking to raise a venture capital round of funding. We had a few offers on the table. We were in due diligence with a few venture capital firms that have already committed to investing in Hudson Financial. but we wanted to get the best deal as possible, and we wanted to stall everything out. Even though we were running out of capital, we still said, okay, we have this line of credit and we could use it to stall, so we could get all of these investors in and take the best offer on the table while they complete their due diligence process. So we never knew what the use case was going to be for the line of credit, but that was a use case for us. So that way we were able to get the terms that we wanted because we weren't desperate for the cash or we didn't need to close early. And we had that emergency line of credit to use in the event that we needed it. And we were able to strike the deal that we wanted and get some individual investors. Grantley, if I'm not mistaken, I think you're also an investor in Hudson Financial as well. And yeah, exactly. And do things like that. So perfect.
Awesome. I know that last year I can share. If anyone else wants to share, don't be afraid to comment or raise a hand. Once again, last year was obviously an extremely lucrative year for my business. I always talk about last year. We were able to secure a line of credit. We used, what's the percentage? I would say about 40% of it to be able to invest in some services, some events, a little bit of marketing, that kind of stuff. And it was definitely lucrative enough to give back to us so that we could put that back. And that line of credit is still open and available to us. So that was actually our first credit product. We didn't have any business credit cards prior to that. We probably have a few subscriptions maybe in terms of like accounts and stuff like that in the business name, but we were extremely, extremely, extremely fruitful in getting that line of credit last year and having that available to us. So that's my spiel.
Awesome. Awesome. And the third kind of type of financing that I want to discuss is venture capital, which is my favorite. It's a form of equity financing where investors provide funds in exchange for ownership and equity in your company. This is really commonly associated with startups and high growth companies. So it's always important to know that some companies are venture backable and some companies aren't venture backable. If a venture capital firm is going to invest in your company, they want to ensure that you have a path to become $1 billion corporation. You have a path to make $100 million in monthly recurring revenue. And this is kind of associated with high growth tech startups where you don't necessarily need human capital to manage the day-to-day operations. Like Zoom, this is the platform that we're all using. This is a venture backable product, whereas the host pays a monthly fee for this, and everybody uses Zoom. So they're probably generating hundreds of millions of dollars on an annual basis. And those are the kind of returns that a venture capital firm wants to see. The reality is, I think the stat is 9 out of every 10 venture-backed startups fail. So they're just relying on that one company that they invest in to return the whole entire fund. So I know a lot of people in this call, some may be small business, some may be startups, but does anybody have experience with venture capital or trying to raise venture capital for their startup? And if you had a question in terms of this is what your company does, I could let you know whether that falls under the path of venture capital or traditional financing. Juliet, I'd love to hear your experience.
Yeah.
I won't be that long-winded this time around.
Fine. We don't mind. We don't mind.
Okay, so I'm into the hospitality industry, which is hotel resort, but it's a different spin on the resort. It's just like every other resort, but we're a spiritual-minded resort in the they call us the religious resort. Apparently it's a big thing now in regards to hotel and hospitality. Now, in regards to that, the minute they hear religious or anything surrounding that, it becomes a red flag for them, because now we're not alcohol based, we are mind, body, and soul rejuvenation. And because of that, I find that even going to the venture capitalists, they want to change the scope of what the narrative and everything that I've built. And I refuse to do that, because that's not the scope of what we're entertaining. And because of that, you know, I've about 2 or 3 of them has said, no, even though it's a lucrative business, because I've gotten some reports from Dubai in regards to the religious aspects of it. And they came out with a statistical report that the hospitality religious industry is going to be a $1 trillion company moving from 23 onwards. And the reason for that is the generation gap and coming down to the millennials, they are now finding that they are searching for something and they can't find it in the secular world, but they can find peace of mind and rejuvenation in the spiritual world, right? So that's what we're doing. And the difference is we don't entertain alcohol on the premises. What we do, we're all inclusive. You have all your drinks you can drink. However, it's not alcohol based because we want you to have a clear mind, body, and soul in regards to what you're trying to achieve. And so that's the only thing. But we do give 2 glasses of wine at dinner time, right? So in saying all of that, that's where it kind of, the fine line comes in because of the alcohol base and because of what we're trying to promote. But I'm not deterred because I know there's people out there that looks for that, because when we did the research and development, you would be surprised at the demographic that is gravitating to that. And when we built our website, we did a test run and we had to shut down the website because they thought it was open, and we were having bookings like 10, 12 bookings a day. So we had to shut it down. So we know there's a market there for it. So now it's just to get our funding to get it going.
Sweet. No, that is awesome. So this isn't open as of yet. So you've done the research and development, you know there's a market for it, and now you're looking to raise the funds for that, correct?
That's correct. What happened also to be, I even went a step further. You know how, what do you call it again? The ships, when they're doing their tours and stuff, even though the ship is not built, they are promoting it, right? And so they have bookings and stuff. That's what we did. That's what we did. And so we're booking it, but dealing with the different countries, i.e. Jamaica, they don't work the same way we do. North America, they're like a slow snail to everything. So because of that, time is gone. We even have a booking for a wedding in January for 150 people. So I'm promoting like there's no tomorrow because I know this is going to happen. And it's just a matter of timing right now for us.
Yeah, that makes a lot of sense. And ideally, when is the goal to open this resort by?
By January 2024.
Yeah, sweet. And it's Canadian based.
As a matter of fact, it's already existing. The place is already existing. It's basically a takeover.
Yes, I see.
Right.
Sweet. So
And
for
the
that,
uniqueness for us is just the building. The building is called Two Scrolls, and it looks like a Bible. The building looks like a Bible. It's things that you would find like in Dubai.
wow.
Awesome.
Yes.
Yeah.
Yes.
Awesome. That being said, so if I was in your shoes, the 3 avenues in order to raise capital for that would be self-financing, bootstrapping, personal savings or profits that you currently already have, along with angel investors who wish you all, for those that don't know, they're instead of venture capital firms that invest money that other people give them, it's high net worth individuals that invest their personal funds into a business in exchange for ownership equity, as well as equity crowdfunding. So there's a ton of equity crowdfunding platforms that have gained popularity as of late, which means raising funding from a large number of people. It's an alternative way to access capital. And that's what we've done in our earliest stages. So when I was in the incubation stages, similar to you, Julia, in terms of we knew there was a market for this, for our product, as we surveyed a bunch of people, but it came down to getting the capital to do it. So we did an equity crowdfunding round of funding, and that's how we raised the funds to be able to do that. So how far along are you in your fundraising journey for this, Julia?
Yeah, as a matter of fact, if you could tell me that name again, not the angel investors, but what's the next one you said?
equity crowdfunding. So I'll post a link of a good platform in the chat.
Right. So what I've decided to do is through the lawyers, we offer a minimum of $15,000 in regards to investment. You invest in there, and there's a sweet return on your investment, whether you want shares or you want a defined amount that we give back in like 2-3 years. But we're hoping that this will take off better than we would expect. And from what the research that we've done in development, we've seen that that is pretty much it. Now everything is done. It's registered, incorporated. This has been 7 years in the making. So there's a lot that went in there. So we have our lawyers, we have our marketing group, we have everything ready and set to go. It's just that we're waiting on the financing now, the final financing, in order to purchase the property and have our corporate office will be in Markham, Ontario, Canada. And because of cybersecurity and all that, we want to build a platform portal so that everybody, the other locations, tap through us in order to pull information and data. And we want to keep it local. So therefore, the security on that would be very tight, because we've heard a lot of things that goes on with large corporations with cybersecurity. And so we want to keep that. And that's another part of the administration cost that costs a lot. The softwares, yeah, that's the startup for the software, because you want to make sure that that platform is solid from the get-go, and you're not scrambling later on to do it when it's going to cost you more.
Yeah. Yeah, no, definitely, definitely, definitely. It sounds like you have such a well thought through and strategized plan for your business. So, Tefari, did you want to say anything else about what Juliet has mentioned? And then you have a couple of questions in the chat as well.
Yeah, no, ultimately, I think it's a great strategy. I know a similar company, not in that space, but they have a unique offering where they offer groceries with no people there. You have an application and you go. But where I'm going with this is they partnered up with condo developers to do this. So whenever developers are developing a new condo in the city, they already have a space for them. So if you could pitch this in the right way to developers, and there's a huge demand, like you say there is for this, maybe you could partner up with some developers and have multiple locations in condos where you already have hundreds upon hundreds of people living, so they have easy access to get in there. But that's what I would suggest if you want to do it at a high level, which I know you will. But I'd love to hear the other question.
The developers, we've gone to a couple of them, and so there's interest there, but everybody wants to see, like, I've emptied out my life into this.
Yeah.
You know, so all it is now is that what comes in, that's what we build on.
Definitely, definitely. Grantley, and then I see you, Andrew, as well. Grantley, you can go ahead and go first. Hop on the mic when you're ready, and we're listening.
Yeah, okay. Thank you for that. So I find the VC ecosystem just incredibly interesting. I try to learn as much as I can. And the financing that I can get businesses as well, or I broker, it's all typically just revenue based. So you look at bank statements and things like that. VC I look as like pre-revenue startups. So there are a lot of companies that will apply saying that, they're starting out, they have a pitch deck, they've got a business plan, but we still can't get them financing. So I've always been interested in that side of things. But my question has to do with, and it touches on real estate development, is that I have a real estate developer now that I've worked with before. I've gotten him some financing. Our lenders don't typically like that industry, only because they find it extremely risky. And you can see in the news right now, there's a lot of developers going bankrupt. This guy has a particular, his model is that he actually has a proprietary he has something proprietary that has to do with the way that he develops and builds his residential homes. So that sets him apart from other developers. Now, he's always, like, he's been to the bank multiple times, and he's been with this bank for like 10, 15 years, and they still won't extend him a commercial line of credit, which developers and a lot of construction companies will need, because they need a bridge. When they get a project, they have to pay for, payroll up until their materials and things like that. They might get paid a bit for the project, but towards the end is when they get the full payment. So he brought up an idea to me, and I want to bring it to you because he was thinking about creating his own REIT, right? A real estate investment trust. And he has a business plan, pitch deck, and all this stuff. And he asked me, he's like, well, do you know how I can get investors? But again, that's not my forte, so I don't know what direction to point him in. But I did find it interesting in terms of an idea of like maybe getting venture capital to be able to create a real estate investment trust so he can have his own pool of money that he can access if he needs a bridge to kind of continue a project if he finds himself, kind of running out of cash, right? So, is that possible? And if so, how would that work?
Definitely. Thanks for the great question, Grantley. So when it comes to, I'll answer the three questions that you asked. The first thing that you mentioned was your lenders don't necessarily like working with startups because a lot of it has to do with pre-revenue. So that's not necessarily the case. In startups, you have different stages in life. You have the startups that are pre-product, pre-revenue, which you call the pre-seed stage. You have the startups that are starting to generate revenue and find product market fit. That's the seed stage. Then Series A, Series B, Series C, and so on until they either A, get acquired by a bigger fuel provider, or B, IPO on the stock exchange market. So it all depends on what stage of life the company is at. Like Facebook, for example, they were a startup at one point, Amazon, Tesla, and I'm sure right now everybody would love to fund them if they had the possibility, if they had the opportunity, because they know they would be getting paid back. So it all really depends on what stage the startup's for. And when it comes to development, you mentioned it was tough for your clients to get funding there when it comes to venture capital. The reality is, development is not a venture capital, it's not VC backable. It's just not. The unit economics don't make sense. It's very, very risky, and you're not going to be at a stage where you could go from 0 to $100 million in annual recurring revenue in 2 to 3 years with the real estate property. That's just not going to happen unless you have a real estate tech platform, such as, there's two scenarios I'm going to give. Has anybody ever heard of WeWork here? WeWork or Regis. So they are a real estate tech platform. Yeah, Grantley, just so you put in the chat, you've heard of them, where they're renting out these spaces and they're selling it as a subscription-based software to entrepreneurs and individuals and corporations. So that is venture backable. But if you don't play your cards right, you could lose it all. Like, they're going bankrupt right now. And there's another company on the flip side by the name of Regis. That's who we use at Hudson. So they have virtual offices. So you could pay a monthly subscription fee and have your mail go there. You could rent out a cubicle, you could rent out a whole floor, and everything is ready to go. So those are the kind of venture capital real estate models. And to answer your third question about creating a REIT and turning that into a VC model, yes, I've seen this done. There's a company by the name of Fundriser. They're based in the US, and they're doing this at an extremely, extremely high level. Let me find the website. Bear with me. And I'm going to put it in the chat. It's called Fundrise. They're based out of San Francisco, California. Here, I just posted it in the chat. And they're doing this at an extremely high level. And they were able to raise hundreds of millions of dollars via venture capital funding. So to answer your question, yes, that can be done. So they've raised $355 million, as I can see here, and they're worth well over $1 billion. So if you're trying to do a real estate tech play, that's the model to follow, like the Fundrise, the WeWork, the Regis, not the development game, because there's so many factors that could deter you from starting. Like, I read a stat the other day saying that about between 35 to 40% of RBC mortgages are set to renew next year in 2024. But with inflation and interest rates rising, nobody is going to be able to afford to make those payments. So a lot of markets are going to be a lot of homes are going to be put for sale. And as you know, with increased supply, decreased demand, housing prices are going to drop. I've been reading articles every day of Oakville homes losing over $400,000, $500,000 in value and things of that nature. And I think that's just going to become a norm. But this is your industry. You probably know better than me when it comes to real estate.
Yeah, thank you for that. That actually, I'm on the site now. Actually looks, well, I'm going to pass this off to the client. I myself, I'm not in real estate yet, but this is a very good resource. So I'll pass this on. Thank you for that. Appreciate that.
No problem. And I think
Yeah, you've got another one from Grant Lee or Andrew. Grant Lee just went. Andrew, you had a question as well. Thank you for waiting so patiently. You can go ahead with your question when you're ready.
Yeah, that's great. Thank you for that information. It was very helpful. So as I mentioned, the platform that we're developing now, it's just coming close to being complete. It's at to get us to an MVP, minimum viable product. So what we've done is we've realized, okay, we've got 25% to complete the platform, but we do know down the road that there are going to be some enhancements that need to be made over the next 12 to 18 months. So at this time now, what I've been doing is I've been doing a lot of pitches to VCs. Actually, I wouldn't say VCs. Anybody who will listen at this point, but I'm doing a lot of pitches at this point. In January, I'm going to a biotech show in San Francisco because that's a place where there's going to be a lot of investors there. So the question I have is when you're presenting to these VCs, because we're not in revenue at this point, but we're very close. I know that once we start, there's going to be revenue because I'm already in the business with a full service home care company. So I don't see a problem with revenue. But what I've heard when I've done the pitches is that, okay, well, that sounds great. When you get your first revenue with this new company, then come see us again, which is kind of the chicken and the egg kind of thing. So are there VCs that fund, and I think you might have touched on this, that fund pre-revenue companies? And two, if they are going to fund, what percentage do you offer them in exchange for their investment? What's the norm?
Great questions. Great questions. So what he told you was absolutely false, but that's everybody. Everybody will have a different say on this. We were able to raise over $1 million from a couple of investors, including 500 on Dragons, then before we were even pre-product, pre-revenue. So it all depends on how you share your story. Like, I wouldn't go talking to people, anybody who will listen to you. Investors invest in specific geographies and specific ideas. I'm going to send a link right here. It's called Crunchbase. This is where you'll be able to see a list of pretty much every single venture capital firm in the world. You could break it down between sectors, geographies, regions that they invest in, and then you could narrow your list from there. So let me go into the chat right here. Bear with me. Crunchbase.com. I'm just going to validate that this is the right website. Yes. Okay. So you could find all investors that way. And also in terms of what equity percentage you should be giving up. So there's a rule of thumb. When you're pre-product and pre-revenue, you're raising a pre-seed round. So you could raise anywhere from, let's say, $100,000 to a couple million. How much money are you looking to raise, if you don't mind me asking?
The ask is $250K.
Yeah, so that's definitely easily achievable. I'm also going to send over another link in the chat where you could see what the benchmarks are to raise funding. So if you're looking to raise a pre-seed round where you're pre-product, pre-revenue, rule of thumb is you could probably raise about $100,000 on a lower end, up to $1 to $2 million on a higher end. And that being said, you always want to give up between 15 to 20% per round. So ideally, as the entrepreneur, you want to give up as less as you possibly can, and the investor is going to try to take as much as he possibly can. So the things you could do to increase your company's valuation is hire the right people on your team, have industry experts in domain, have a great business plan, and be able to present yourself well. The reality is, two people could have the exact same company doing the exact same thing, but this person could position it better than this person, and they'll raise more money and dilute themselves significantly less. Does that make sense?
Yes, it does. Okay, so because I have, well, the technology is in its own company, and then I've got a company, a full operating company in revenue that's profitable. So I've heard they're trying to link the two together, and I want to decouple them. I want the technology separate from the full home service. I don't want them to have, I don't want that kind of equity in that main company put to be linked to the actual technology company. I want the technology to stand on its own. So I don't know if that's a typical thing that happens where these investors will say, okay, well, look, I want a piece of both. Is that something that happens, or
It all depends per person. It really depends per person, but ideally, as an investor, I would look at things in three ways. Somebody comes to me pre-product, pre-revenue, just an idea in their head. That's like stage one. Stage two, somebody comes to me with an idea. Maybe they have an MVP. Or stage three, somebody has a fully functioning, robust product. They're profitable, like you mentioned, your other business is profitable. They're merged together. It's like the person would want to invest in the latter because you've already proven the model, you're generating revenue, you're profitable, and it's clearly your area of expertise. So just think about that before you have these conversations.
Okay, perfect. Thank you.
No problem.
Thanks a lot, Andrew. Grant Lee had a comment. I don't know if you have a second question. He said, where can we find consultation to help us navigate through VC funding? I think we need a part two of this, so you can address that comment. And Grant Lee, if you have another comment to make, you can definitely come on and make it.
The thing about finding VC consultation, me personally, I don't know anybody that's been through the VC process other than myself, especially within the Black community in Canada. So I had to learn from 2020 to 2023. I've probably spoken to 250 plus venture capital firms, angel investors. So I just learned on the fly. You passed on this, why? Make the adjustments. Another person, you pass on this, why? And then you kind of understand the signals in terms of what they're looking for, research and development. So, you can feel free to always reach out to me if you had any questions along the venture capital way. Y Combinator, they're the largest accelerator program in the world, and they post great videos on YouTube as well about navigating through the VC process. That's probably the best resource I could provide you with. I'm going to post it in the chat right now.
Okay, that's amazing. Yeah, no, definitely. I find that probably the most interesting side of the whole funding and credit, our capital raising industry, only because I can't. My lenders, they rely a lot on data to be able to say, okay, well, you've got 6 months of revenue, and we're going to base it off of that, and they break it down, and they use a model, a calculator scoring model, to be able to determine what a company or business is eligible for and for how long and so forth. But this whole VC thing is incredible. I had a guy who's interested in investing, but I didn't know where to start. So I kind of wanted to ask him. I'm like, well, without having him kind of invest, but help him get my company to be worth more. Because I know the way it works is like the earlier that you bring people on, the more equity that they're going to be able to have and more money they'll make over time as your company builds and generates more revenue and is worth more. So it was kind of a weird, awkward conversation where he's like, hey, so you've never taken outside money. I'd love to invest in you. And he's like, what do you need from me? I'm like, well, can you kind of consult and guide me on how to raise money and how to put myself in a position where I can get as much venture capital as possible in the future? And that was kind of like, because he's willing to jump in right now, take some equity. But then I'm like telling him, no, don't take any equity right now. Just help me get there. And then after, when I get there, then you can take some equity, right? So it wasn't advantageous for him. But it's interesting. So yeah, definitely, if that offer is still out there, I'll definitely reach out to you and see what I can do. Because you're right. I don't know anyone else in this space. You're the only person, and seeing how you kind of maneuver in terms of venture capitals and investors, I find almost incredible. So yeah, I'll definitely take you up on that offer and reach out to you.
Awesome. Thank you. And I did want to touch on government grants and subsidies as well, because we're talking about loans where you could take the money, but then you have to pay it back at an interest rate, angel investing, crowdfunding, venture capital, where somebody else will write a check in you, but you have to give them equity in your company. But there is a ton of grants and non-dilutive funding opportunities that are available for you all. And I think you should start there first before looking for anything. There's so many unclaimed grants that people don't know about that just get recycled into the system because not a lot of people are applying for it. Even this, I'm sure the BBPA got a grant to do this for all of us.
Yeah, I definitely agree with you there, Grantley. In terms of representation, it is a little bit difficult. Obviously, we're coming from a time of oppression that existed less than 200 years ago. And then we're in a space now where we're just moving forward, belonging to different marginalized groups in different ways. So it is going to be hard for you to find that representation. And a lot of things that you try to do now are going to be your first time doing them. And then what Tefari is about to talk about right now, a lot of you guys have talked about being startups or being part of that startup phase. Grant funding is a great way to work on your presentation skills, your ability to pitch your business, present your business, and a lot of the things Tefari has been talking about thus far. So I would also say tune in, tap into this part that he's going to get into as well, because at the end of the day, with grant funding, you're not borrowing the money and it is available and we're privy to it. So Tefari, you can go on.
Definitely. So I'm just looking for a resource for you all. There's a company that me and my partners were invested in. They're called happily.io. Pretty much they leverage artificial intelligence. You put in your business nature, what you do, and they search the web using AI to find all grants that you would be eligible for. And they even have AI to write the grant application for you as well. So it's a super duper unique resource. I want to say we've gotten nearly $60 million in grant funding for everybody that signed up on the platform. I'm just looking for the website right now so I could send it over to you all. Bear with me. So Chanelle, if you want to take over until I could find that resource.
Yeah, most definitely. I'm glad that this is the area that we're in. As you guys know, I'm the founder and executive director of TSK Wealth Planners, which is a nonprofit. So as a nonprofit, our main two sources of funding are government funding and then obviously donations or executive contributions. So when it comes to raising money for grants, as Tefari is going to build on for a second, we've got AI and tech and all that kind of stuff. I also have a few things that I'll post in the chat, a few companies and nonprofit organizations as well that post updates on grants and kind of organize and make everything secular for different businesses, different industries. And then right now, there's also a lot of funding that is available for marginalized people, people of color, people belonging to protected classes in society, people that are getting into tech, media. There's millions literally of dollars that are on the table. So definitely you want to tap into these type of resources, use AI to make yourself more efficient. And I think Tefari just posted the link in the chat there. So if you're ready, you can go ahead with everyone.
Definitely. So I'm just going to do a quick screen share if you all don't mind and just show you how it's done. So it's Happily AI. This is a company that we're invested in. But ultimately how it works is they help people get funding, money, leverage AI to see what opportunities you can get. So as you can see, you fill out all the information and then they let you know, okay, based off of everything you put in here, there's about 15.5 million potential funding offers for you. 17 grants, 8 tax credits, 24 loans, accelerator, incubator programs, hiring grants where you could get human capital for free. And ultimately, yes, it matches you with the funding. You fill out a quick application. They have a Grant GPT tool enabled inside. So they will literally write the grant for you with AI. And there's a grant writer marketplace as well, where you could find export grant writers so they could do that for you. So we've helped a ton of people get funding for their business. Over 34,000 happy clients, over $2 billion in funding that we've been able to do, creating over 2,000 opportunities. And I would love everybody here to leverage the service as well, as it's absolutely free.
And Tefari, you've just got a quick question. Is there a cost associated with the platform?
It's a free platform. I want to say the only fee that you do pay is once you receive funding. I believe they take a portion.
Of course,
Once
yeah.
it's received.
Awesome. So yeah, maybe you can talk to us a little bit more as well about what receiving government funding is like. I know a lot of people get curious about compliance. Is it more difficult than applying for loans, taking their chances, all that type of stuff? So maybe you could talk to us about that.
Yeah, so from experience, I'll say that a lot of people are missing out on these opportunities, and I include myself in a lot of these people because we have never applied for any government funding, any grants, and there's so much money and things that we're missing out on when it comes to my peers talking to me about the grants that they've been able to receive. I've just been so reliant on venture capital and angel investors. So yes, we're getting the revenue, but we're diluting ourselves when it comes to equity in the company. So don't make the same mistake that I've been making. Definitely the first thing you should be doing is looking out for grant opportunities, tax credits. I'm not sure if you guys have heard of Shred. So for those of you that have technical employees that are working on your application, your website, all of the tech stuff, you're actually eligible to get 60 cents per dollar back, which is insane. That's about 60%. So yeah, definitely look into the grants.
Yeah, I know right now too, for the tech industry, there's a grant from 50K to $3 million. It's open. I think it closes in February. The application's lengthy. You can reach out to me for that one. I also know there's a media grant. And then Juliet, you are in wellness. I wanted to say to you a little bit of advice really quick. If you shift a little bit from hospitality into wellness and even dip a little bit into the senior target, you might see a little bit of change when it comes to looking for investment or looking for funding, because you also want to align yourself with your area's goals, depending on where you are geographically and what the government is providing to your region at that time. So that might be a little bit for you too as well. And then Tafari, you could go ahead.
Yeah,
Appreciate that feedback. Thank you.
Definitely. So before I move on to another subject matter, does anybody have experience? Have you ever tried applying for a grant or hired a grant writer to do it for you? Definitely want to learn from you all and see what your experience has been when it comes to finding grants. And if there's anybody here from the BBPA on the call as well that wants to talk about the grant process that they go through, it would be great as well to educate everybody. I can only educate on the subject matters that I've done, and I have not done the grant writing process before. So I'd love to hear from somebody who has.
Yeah, I'll start to make everybody comfortable. And I don't know if Stephanie's here today, but yeah, I could start there. I've applied for extensive grants. I've applied for grants for other businesses. For me, it's an enjoyable process. I like to write, I like to talk. For a lot of other people, it could be a slightly annoying process. Tafari has asked who has applied for grants, but I'm also curious to know, if you guys want to answer in the meantime, how many of you guys think your businesses are eligible for any of these grants, or think that your businesses would get some of these grants that are available? I think that's like an important first step. I didn't think TSK Wealth would have any interest from the government, considering that it was directed towards marginalized people. And I had a very negative outlook, I could say, on the system and on the government when I initially started my business. It wasn't until looking into some of this grant funding and securing some of the grant funding and interacting also with some of the people who give the grants, so the providers and institutions, and making sure that I create and curate good relationships with those institutions, that I kind of was able to let that guard down and realize how capable we were of receiving some of that funding. So just again, if you haven't received any funding, let us know if you think your business would, or if you haven't, if you just kind of thought maybe my business wouldn't get any grants. So if anyone wants to touch on that or reach out about that, we're listening.
I actually applied for the IRAP CDAP grant, and I was declined mainly because I'm in the finance industry and I broker loans, unsecured business loans to businesses. And they said that because it's highly regulated, even though that the model and the way that it's structured, the way that my lenders at a fintech company structure it, they're not actually loan companies. They're just buying future sales of businesses at a discount. So, you know, and I found that With the banks as well, they obviously want to bet on businesses that are going to give them a return, but they also don't want to fund their competition in a way, because there's a thing going on with open banking and the banking system. That's a whole nother story. Yeah.
Yeah, 100%. There's often like a little bit of conflict of interest there, and it's really, really good, Grantley, that you've observed that. Some of those bureaucracies you just cannot get around. For example, I've had a lot of our services and our events funded, but one particular service, which is Noir, which is almost like our biggest initiative, it hasn't gotten funding and probably won't. And that's mainly because it's a service that's provided for entrepreneurs. So there are always like small technicalities like that. What you want to do is try your best to, let's say, like align yourself with other organizations that apply for grants or apply for funding or look like they've done similar activities as you, and see, because there's typically organizations that are directed to filling those gaps as well. So like to addressing your issue or to providing funding with people in your situation, if that makes sense.
Actually makes a lot of sense, actually. Thank you.
Okay, awesome. Andrew, you said yes, we could qualify. Do you want to hop on the mic and tell me a little bit about that, and if you've gone for any grant funding and what that looks like?
So for years we've been doing the Canada Job Summer programs, kind of an ongoing thing that we've been doing, just trouble finding students. That's the tough part. And then we applied for the CDAP program. So we've got funding there for consulting and some support. But I know there's some others out there that we probably are not aware of. So the resource is really helpful because I can see where we can specifically get to funding in health, because there's a lot of funding in health. I just don't know where it is, but the Happy AI is really a great tool for me to start actually to look for it.
I think so as well. And as you mentioned, Canada Summer Jobs, that is a really great grant. I'm so glad that you brought that up. A lot of startups, similar to what Tefari mentioned, what you want to do is be able to get people on your team and get the right people on your team. And a big downfall for a lot of us, of course, is being able to find funding to be able to hire people. I'm so glad you brought that grant up. The applications are closing again, I think January 15th of 2024 for anybody else who's interested in that grant. We've received that grant as well. It's a lucrative grant. However, I noticed you said your issue was that you have trouble finding, obviously, students or people to place there. I work in Hubbard's research faculty a little bit in partnership on an external project. Nonetheless, I'm always finding interns, working with students to help them acquire placements for their work term and to fulfill their bachelor requirements. With that being said, reach out to me, let me know a little bit more about your business, and I can help you get on platforms like Humber's platform that they provide for their students who are looking for placement. So just kind of directly link you to that so that you can get some of those bodies and some of that manpower. And your students will come straight from the STEM industry. So that would be great too.
Excellent stuff. Thank you very much for that.
Yeah, definitely. Let me see if I can, and if there's any more questions or anything like that, you guys let me know. Andrew, make sure you reach out to me about that. I don't want to take a pause right now, but I will definitely send you that platform, what that website looks like, and kind of where your postings would go if and when you get that funding again this year.
Yeah, I wanted to say something. Yusuf put in the comment that he's looking for a job. He's a third-year finance student at your university. So one of my buddies, his name is Austin. He's actually one of the vice presidents at CIBC, but they're giving a $10,000 grant, like cash to, plus an intern opportunity where you could work in either wealth management or commercial banking. And they're only targeting Black, Indigenous people of color university students. So let me look for that link right now and I'll send it into the chat. And I will put in a good word for you. So hopefully you're able to get that 10K cash plus that internship opportunity. I'll let Chanelle take over while I'm looking for that link to send over to you.
Yeah, definitely no problem. And I really hope you guys are getting the resources that you want today. Grant, Lee, Andrew, for those of you kind of tapping in, interacting, Juliet, I'm sure you guys are getting the most. Anyone else who has any comments or wants to know any information? Yeah, Yusuf, that's great. Thank you. It's awesome. And to give you guys just a little bit more information and background about grant writing, a popular question I'm always asked is, do grants only grant like corporations money? I know some people who are at the startup phase that are maybe not even incorporated as yet, small business. There are tons of grants for small businesses as well. If you're looking to get your company off the floor from that method first before incorporating, you could also look into that. Yeah, no problem. Thanks, Grantley. Um, so I was saying you could also look into that stuff. There's grants for small businesses. There's grants for startups. There's also a really big grant called the Investment Readiness Program. And this grant kind of runs quarterly. I encourage all businesses to at least get their foot in the door with this grant. It funds up to $200,000 over a 2-year period. So you could get $100,000 per year. Similarly to what Tefari had mentioned with loans, grant givers, grant providers also do that rejection process with letting you know what it is that you're missing or why you didn't qualify. Sometimes they'll even do complete one-on-one interviews to help you prepare for the next round of funding. So it's a similar process as well, where you can get your foot in the door with investment readiness. You could be earning up to $200,000 in just grants for your business. And even if you're declined, you'll have that opportunity to build on the application and get the grant in the future. So that was my little piece. Tefari, did you want to say anything?
Yep, definitely. Thank you for all of that. I did want to touch on how to secure loans and preparing a strong business plan, I should say. So you really do need a well thought out business plan, and you need to be able to present yourself in a professional, appropriate manner. As I mentioned before, I gave 2 scenarios where 2 people were pitching the same idea, same company, but one person presented it in a better way, so they were able to raise more funding at better terms than the other person. So use the powerful tools, use Microsoft Excel to come up with financial projections, use QuickBooks to ensure that your finances are organized, hire an accountant to take care of your financials, because when you're dealing with external financing, especially loans, lenders want to understand your business, its potential, and all of the risks involved. A strong business plan demonstrates your commitment to the vision and your ability to manage the resources efficiently. And they also want to see what the use of funds are going to be. So if you could map that out over a 12, 24, 36, 48, or even 60-month plan, they'll be very appreciative of that. So a couple of tips that I have for creating an efficient business plan is, number one, have a clear executive summary that anybody could understand. So you don't want to overcomplicate things. If you're into, let's say, computer science or engineering, don't use fancy buzzwords or complicated terms that nobody's going to understand. You want to ensure that a 5-year-old could understand your business plan and what your product does. Like when somebody asks what Hudzy does, I'll say we're a debit card that builds credit. Very simple, so everybody could understand. Also, provide a condensed overview of your mission and your objectives. Outline your model, your target audience, and your unique value proposition. You can't necessarily say that you're targeting everybody. You need to have a specific segment group that you're targeting. Niches are riches. Have a market analysis, so demonstrate a deep understanding of your industry, market trends, and your competitors. Organizational structure, so clearly define who's on your team, what are the roles, what are the responsibilities, and how are they going to help you win. Products and services, so this is important, detailed of what you offer, emphasizing the value that it brings to customers, and most importantly, how is it making money? How is it making money? Because these lenders want to ensure that they're going to be able to be paid back, or else it's a huge risk for them. Marketing, illustrating how you plan to reach and attract clients, because without clients, your business won't succeed much. Financial projections, as I've mentioned, provide realistic and detailed financial forecasts, including income statements and cash flow projections. You know, if you have a goal to get from 0 to $2 million, that's probably not going to happen in your first month of business. It may take you 5, 6, 7, 8 years. So ensure it's realistic and you have a clear path to getting there. What I like to do is reverse engineer. If I want to get to X amount of revenue and X amount of users between a certain amount of time, I start here and then I reverse engineer what steps do I need to do what steps do I need to take to get there. For example, if we are looking to make $1 million in a year and our product is sold at $100, we know that we need to sell 10,000 products. If we want to do this within the years I mentioned, I know we need to have 830 sales on a monthly basis. So just reverse engineer, break it down, how you're going to get there. And then, as I mentioned, clearly articulate what the loan will be used for and what the funds will be used for. So has anybody ever created a business plan? And what was your experience in creating the business plan?
I'll go first again. Oh, Juliet's ready for us. Okay, I'll go first really quickly, and then Juliet, I'll give you the floor. I've created probably, I'm going to say in the 900s now of business plans. I've also have 2 degrees in business. So I have reason to have created so many business plans. But as Tefari mentioned, the executive summary is a really crucial part. And also just making sure that you understand language and you don't try to overcomplicate terms. I love to use fancy language, as you guys can probably tell. So I've had difficulty in the past writing business plans and also maybe having to hand them off to someone else to just kind of review and see places where I could have been more concise or gotten more to the point. And then also just understanding language. So like the difference between a mission statement and a value, what an executive summary actually is and what it should include. So that kind of sums up my experience, was just learning about what different terms mean and when and where to use fancy language versus like layman terms. Juliet, you can go ahead.
I echo that sentiment. However, I have a little philosophy that I say, speak to me like I'm a 2-year-old.
Yeah.
Because they understand, even gobble, 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 they will understand it, right? So, and I also know, depending on who you're doing the business plan for and for the purpose of, banks, they don't know your business. They have no clue of your business. All they want to do is see the statistics and the financials, because to them, that's the key. And you can concur to that, Tefari. That's just first and foremost for them. Everything else is secondary. So you can put your life story in there. It doesn't matter to them. It's just the financials. And then they ask you some questions in regards to what it is. You, in essence, have to educate them on your business. And even then, sometimes they don't get it. So, but my business plan, I did it through a program called Life Plan. It walks you through, if you've never done a business plan before, Life Plan will take you through the whole process, step by step, little by little, and they give examples of what you should or should not say. I don't know if you've ever heard about it, Tefari. Life Plan?
Life plan, no, I haven't heard of that one.
Yeah, CBCC gives Canadian Black business. They give that if you join their platform, and it's for free.
Awesome.
Yeah, so that's what I use, and then we have a certified accountant that did all the financials, download it in there, and then you can tweak it however you want it. You can download it on either as a PDF or in Word or in PowerPoint. So later on, you can modify it to you for different things. Yeah.
Yeah, that sounds awesome. And hopefully you can even share that resource with everyone as well. Don't be afraid to share your resources too. If you could share that resource that you just talked about with everyone, and anybody who might be interested in that, you can grab that from Juliet as well. Yeah, thank you for that. Tefari, you can continue when you're ready.
Definitely. So due to the matter that we have about 8 minutes left, I'm going to summarize everything that we talked about here, the key takeaways. So the points that we covered we covered business financing, the different types of financing, such as loans, lines of credit, venture capital, grants, creating an effective business plan, financial management, and best practices. There was a ton of great conversations that we had. A lot of people gave great feedback. I hope everybody was able to absorb some value from this conversation. But typically what I like to do for the last 10 to 5 minutes is leave the floor open. First of all, I want to thank you, my express gratitude for you all being active in this conversation and acknowledge how important you guys all are to me, to Chanelle, to the BBPA. Thank you so much. I will leave my contact information in the thread if anybody wants to reach out later on. But I want to take this time to leave the floor open.
Yeah, so hopefully if anyone has any questions, Michaela, I know you had a question. I promised you we were going to come back to it. So the floor is yours first. And then following that, feel free to reach out, open up your mics and ask anything. Go ahead, Michaela.
Hi, thanks. Chanelle, this is for you. It was based on the grants that you were saying, the investor readiness program. Do you know the application period for the upcoming quarter or no?
So they actually just closed the quarter in November. I think it was November 15th. I had to run and get my application in. There is going to be the next quarter they're going to do, I want to say it's January. It's pre-spring. What you could do is if you email me, I sent this privately, but I can definitely leave my handles as well. I forgot it for the last week. So if you email me, I can send you the breakdown of that. I have kind of like a template that I've curated over time with the grant deadlines and that kind of stuff. And I can just loop you in on that document, or I can send it to you so that you have it and so that you could see what's coming up and be able to prepare. And I can do anything I can to help you prepare for that as well.
Okay, awesome.
Yeah.
And second question, the Happily, is that, I don't know if I got it wrong, but that link, this one is for you, Tefari, but both of you, because I don't know if both of you use the platform. For startups that haven't moved to incorporated, what's the probability of seeing grants that don't require that?
Tefari, you can handle that and then I can build.
Well, I'm going to assume you're not going to find a grant if you're not incorporated, but I do have a great resource for a platform where you could incorporate your business within an hour, and it takes about 5 minutes. It's called
sorry. Go ahead.
OWNR. It's called owner.co.
Mm-hmm.
They do charge, I want to say, about $300, but they give you a $300 rebate once you open up a business account with the Royal Bank of Canada.
Oh, okay.
Yeah, so they take care of everything from registering you, incorporating you. If you have shareholders, they'll take care of your minute books. They'll do everything for you. So they're extremely valuable. And you get $300 back once you open up an account with RBC. So, yeah.
Okay.
And just to build on that, I don't know about the platform, but so maybe the platform doesn't do incorporations, but there are still a lot of grants that are available for small businesses. Oftentimes they're micro grants, meaning less than 20K, but they are still available nonetheless. NARF, Canada Summer Jobs, Canadian Heritage Foundation, those corporations, companies, bodies do have grants, micro grants, oftentimes under 20 to 50K for small businesses that are sole proprietorships versus being incorporated. But as Tefari said as well, it's definitely something that you want to put in your plans. I do also try to deter people from staying in that small business realm. So if you haven't done it yet, yes, there are grants available if you want to grab some micro funding, but definitely just to back what he said as well, make sure you get that process done as soon as possible. As we've discussed over the last few weeks, and I'm sure you'll continue to learn, you definitely want to shift that liability so that you could have as much leverage and then personal freedom as possible.
Okay, awesome.
Yeah.
And Tefari, what was it? Owner.co?
Yeah, I posted it in the group chat.
I don't think
Oh,
it got
this is the direct
maybe
message. I'm not sure.
It'll change it for you. Yeah. So he'll post that one as well. And then I've also got a list of all of the links and that kind of stuff that Tefari has shared today. So if you leave the chat and you didn't remember to grab everything, I've definitely got it all together in a little list for you guys too. On that note, we only have a few more minutes. I want to say thank you. If there's any last minute questions, concerns, then we can go ahead. And then if not, Tefari, you can go ahead and close. Thank you guys so much for being here. And I also want to mention that the earbuds are still up. Those wireless earbuds, the cool ones that we had, they're still up. So finish the survey to get your chance at grabbing a pair of those AirPods as well. Tefari, you can go ahead, and then I think we're good to close up.
Awesome. I have nothing much to say. Just thank you all for taking the time to be here, and I hope all of you have gotten some sort of value from this conversation.